The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
There are a couple of oil companies lighting up the value stock radar screen this time around, and our value stock strategist Tracey Ryniec is here to tell us more about them. Now, these are not domestic oil companies.
No.
These are foreigners.
Yes.
The first one is Total, I guess that's how it's pronounced, a French integrated oil company.
Yeah, they've been around for forever. They're kind of like the Exxon or Chevron of France.
Okay.
They're big in refining, you know, the both downstream and upstream. They produce, they refine, you know, chemicals, everything. They're interesting because they've been really streamlining the business. What a lot of the big integrateds are doing now, they're taking this opportunity with crude prices having come way down to really make some changes in their business. It's going to be hard on the workers because in some cases it means they're closing down actual facilities. Total is closing / changing at least one of its refineries. It's still Europe's largest refinery, but it's gone from over 20 refineries in the 1970s down to only 7 now. So you can really see they're getting more efficient too in what they're doing. But you know, as a shareholder, it's a good thing that these companies are really streamlining, figuring out how many employees they really need, and you know, possibly laying off people. Bad for the employees again, but good for the shareholders. It is a Zacks rank #1 now, so we're starting to see some stabilization with the estimates with the big oil companies. I think the analysts got a little bit too, they cut too much after the crude prices plunged last year, and they weren't sure what was exactly going to happen in 2015. And now we've had 1 quarter and we're about to have a 2nd quarter of results here. So I think the analysts are kind of figuring it out, at least with oil around these prices. But if oil goes below 50, we could see another cut in the estimates, so that's something to watch. The estimates here, I put them up. You can see they're definitely down from a year ago, obviously, because of the price of crude, but the refining margins actually help these big integrateds. They have various business segments, so it's not all about production with them. That's why I like the big integrateds much better than just the production companies or a driller or, you know, these smaller, more specific companies, because they can ride it out with their various different business segments. You can see in 2016, the analysts actually have a rebound in the earnings. We'll wait and see. A lot of the analysts expect oil prices to rebound in the 2nd half of this year. Right now, we're not really seeing that, but they do expect that. Whether or not it'll happen, we'll have to see. That's why there's a lot of ifs and, you know, watching with these stocks. The shares today are hitting 52-week low as crude is sold off here kind of dramatically during this week. They're pretty cheap, trading around 12 times. That's not as cheap as I've seen the oils go, but I did just see a chart comparing the oil energy sector, the entire sector, with the S&P 500, and it is at its cheapest in something like 20 years, comparing to the S&P 500, which we know is not exactly cheap here either. So relatively speaking to the S&P 500, these big cap oil companies are cheap. You might be able to get it cheaper, so I would be watching everything that's going on with oil prices and, you know, everything in the sector. You are getting a big dividend with this one. That's another thing. Yeah, 5.2%. There's no guarantee they're going to keep it. A lot of the oil companies have been saying, you know, we're watching and we may have to cut depending on cash flow. But for right now, that's pretty attractive.
Sure. All right. The other oil company that you want to talk about is Sasol Limited. I think that's how I pronounce it. If it's not, I'll apologize. South African integrated.
Yeah, I've never talked about them. You know, a lot of countries have their own big oil companies, as I was just talking about Total. Total is so big. They're in, you know, numerous countries producing, like Nigeria and Libya, and so it's not just France. Similarly, these guys are also not just in South Africa, but they're much smaller. They only have a 19 billion market cap. They also do the upstream and the downstream. They have service stations. So chemical business, some of that is helping with the oil price decline. They're Zacks #2. We only have 1 analyst covering them. A lot of times on the foreign companies, there's a lesser analysts and they're not quite as big as Total, so a little less coverage here. But you can see the earnings estimates, they're also expected to be down this year, not surprising. And then next year, they're not getting the rebound that we saw with Total, so that's something to watch here. But you can see that the estimate is really dramatically increased already this year because, again, I believe the analysts were just overcompensating to the downside, and now they've raised. So things aren't looking quite as bad. They did come out and talk about laying people off, as I talked about earlier, unfortunately, because they're streamlining now because no one knows how long this down cycle is going to last. So they have to write the business while they can. And they've also talked about the dividend and that they might not, be able to be paying out what they previously been paying. They still are paying a nice dividend right here, a little over 3%. So that's nothing to scoff at either. But depending on cash flow, it is something to watch. It's not guaranteed. You can see the chart. They're not quite at 52-week lows. They're getting close, though. Not quite as cheap as Total, a little over 13 times. But again, if you're looking at the large integrateds, the foreign integrateds are something to keep an eye on, in addition to the domestic U.S. big integrated companies, mainly for the dividend. But also, because their business segments are pretty diverse, so they're able to ride out these ups and downs.
Okay, do you own either one?
I do not.
All right, check out other stock information on our website, Zacks.com. If you're not there already, get on over. You can link to it right off the homepage. And if you're watching this video on YouTube, for example, you could subscribe to our videos there as well. And leave a comment while you're at it, too. We're always interested in feedback. With Tracey, I'm Terry Ruffalo.